world is going digital and the IRS is taking notice. More people are earning money online than ever before. Think side hustles, freelance gigs, and selling handmade goods. To keep up with this trend, the IRS is introducing a new rule for 2024, the $600 reporting rule. This rule aims to ensure everyone pays their fair share of taxes, even those earning income through apps like Venmo, PayPal, and CashApp. This new rule is a big change, and it's important to understand how it affects you. Whether you're a seasoned freelancer or just starting your side hustle journey, knowledge is power. We'll break down everything you need to know about this new rule so you can navigate the world of online earnings and taxes with confidence. Before we dive into the $600 rule, let's rewind a bit. Previously, you got a 1099K if you made $20,000 and had over 200 transactions. Many small side hustles went unreported. The new $600 rule changes that starting in 2024, $600 or more will trigger a 1099K. More people will need to report their online earnings. This change ensures fairness in reporting income. Let's get down to the nitty-gritty. How exactly does the $600 rule affect your transactions on platforms like Venmo, PayPal, and CashApp? It's simple. Any payment you receive for goods or services that total $600 or more will be reported to the IRS. This means if you sell crafts online, offer freelance services, or even drive for a ride-sharing company, you need to keep meticulous records of your earnings. Every dollar counts, and you'll need to report it accurately when filing your taxes. But don't worry, this doesn't mean every payment you receive on these platforms is taxable. The $600 rule only applies to business transactions, not personal ones. We'll delve deeper into the distinction between personal and business transactions in the next section. Section 4, Business or Pleasure, Drawing a Line in the Digital Sandbox. Here's where things get a little tricky. The IRS distinguishes between personal and business transactions, and it's crucial to understand the difference. Personal transactions like splitting a dinner bill with friends or sending a birthday gift are not subject to the $600 rule. These remain outside the realm of taxable income. Business transactions, on the other hand, are payments you receive for goods or services you provide. This includes everything from selling handmade jewelry on Etsy to offering freelance writing services. These earnings are considered taxable income, and you'll need to report them accordingly. The key is to keep your personal and business transactions separate. If you use the same platform for both, consider creating separate accounts to avoid confusion. This will make it easier to track your business income and ensure accurate reporting come tax time. Practical tip for a smooth tax season. Change can be daunting, but being prepared is half the battle. Track everything. Keep detailed records of all your business transactions. Separate accounts for business and personal transactions to avoid confusion. Consult a tax professional if you're unsure about any aspect. Stay updated on tax law changes. By following these steps, you can approach tax season with confidence.